Devon, that emergency rate cut, another interest percentage point down, obviously going to be very welcome news for bondholders and people with loans, but at the same time some very dire predictions from the IMF about global and our local growth prospects.
And those predictions will tell us why those rate cuts were so important, Sally. And if we look at it, let's start with this colossal economic damage that the virus has done to the world economy. The International Monetary Fund saying the global economy is expected to shrink by 3% this year. This is a stunning collapse of activity that will mark, by the way, the steepest downturn since the Great Depression of the 1930s. Here's the IMF's chief economist, Geeta Gopinath.
But this is a deep recession. It is a recession that involves solvency issues. It is a deep recession that involves unemployment rates going up dramatically. And these tend to leave scars. And while there are many very strong policy actions being taken, some of this will spill over into the second half of this year and into 2021.
And that's the IMF and what this virus has done to the world economy so far. It is saying today, though, that there will be a recovery of sorts in 2021, next year, but not enough to take the world economy to those pre-virus levels. Now, what about South Africa? Whereas, as far as South Africa is concerned, the IMF projects GDP growth to be 5.8% in the negative. That's a contraction of an economy that was already in trouble before COVID-19. Well, it comes on a day that the Reserve Bank puts its economic forecast at a negative 6%. And it's cut interest rates in an emergency move by another 100 basis points. Now, Reserve Bank Governor Lesetja Kganyago saying the bank's Monetary Policy Committee considered the economic impact of the extended lockdown before cutting the repo rate to 4.25%. The latest cut means the prime lending rate at banks will now drop to 7.75%. The bank's forecasting model sees another 5 more cuts of 25 basis points each going into the first 3 months of next year. So indeed, those moves by the Reserve Bank actually hoping to bring some sort of relief to the economy.
So what is our finance minister saying about all of this, and has he spoken about whether South Africa will need to ask the IMF for financial support?
Yeah, that's a big question. A lot of controversy and debate around that, Sally. Finance Minister Tito Mboweni insisting South Africa will not approach the World Bank and the International Monetary Fund for budgetary support. Now, there's been resistance to such support in different quarters because of the stringent conditions that come with it. Speaking during a media conference call, he said government is looking at packages from those institutions which are specifically aimed at COVID-19 support measures and not for budgetary measures.
Now you'll see the IMF has released a basic Q&A on the kinds of facilities which are available at the IMF. We are not looking for budget support. We will be looking for the COVID-19 specific packages that we can access, and we're talking to them about that. But we're open-minded, but not budget support. So we're looking at programs which will not be accompanied by any structural adjustment program.
All right, we're going to put all of that together and get some analysis now from Standard Chief Economist Kevin Ling as he joins us via Skype. Kevin, thanks indeed for your time. Let's start with that last point, possible outside financial assistance. The Finance Minister says we will only seek COVID-19 help, but is it not time to consider broader budgetary support for this economy?
Evening, Devon. I think it is actually. Obviously, government finance is now under enormous pressure with the economy declining, let's call it around 6%. What's going to happen is obviously tax revenue is going to fall well below budget again, which means the government's going to have to borrow significantly more. They already are borrowing a huge amount that has been built up over the last couple of years. And all of that is telling us that we're going to struggle to finance ourselves. And so that's going to put a lot of pressure on government finances. And I think they're going to be forced to go outside of South Africa to look for some of those finances. And that would include going to the IMF and the World Bank. So I think it's inevitable. Obviously, there is finance available from the IMF specifically for COVID-19 relief, and the Minister was suggesting that we can access that finance without a lot of conditionality. The problem is that some of that finance is fairly small in value terms. In other words, will that be enough money for what the government really requires? And if the government requires more than that, then generally that would involve some sort of structural adjustment. So I think from what the Minister said, yes, we could apply for some of this money as long as it's relatively a small amount, and then it could come without conditions.
We know it's a small amount because we're not going to get any further money, Kevin Lings, from taxes. The Reserve Bank and the IMF are similar now on how they see this economy contracting this year, around about 6% in the negative, so clearly no taxes.
Yes, so with a contraction of around 6%, you would expect a revenue shortfall in the order of about 70 to 80 billion rand. Now, if you remember last year, we had a revenue shortfall of just over 60 billion. Obviously, the government then tends to keep spending, and because we've got this revenue shortfall, the government effectively has to borrow that additional money. So this year, I'm forecasting a revenue shortfall of around 75 to 80 billion rand. That's assuming the economy declines somewhere between 5 and 6%. All of that money has to be borrowed. Then obviously government has to borrow if they're going to spend additional money on supporting the economy, and clearly the government has to do that. So it's not just a question of a revenue shortfall. It's also that government is going to have to spend more money during this phase in order to support the poorer element of the economy, and that can take up quite a significant amount. Then we've got question marks around whether we have to provide further funding for the SOEs, maybe Eskom or SAA or SABC as the year unfolds may require additional funding, which when you put it all together is telling us that government is going to have to not just borrow a huge amount of more, but look for additional finance as the year carries on.
Kevin, let's shift focus to the Reserve Bank. We've seen aggressive cuts by the bank, 2% of cuts in interest rates in just 1 month. Surely that puts some money in people's pockets one way or the other.
Look, it helps. So we've had essentially this year a cut of 2.25%. If you remember, the Reserve Bank was cutting interest rates last year. So the total is a meaningful cut in interest rates. Obviously, you wouldn't expect people, given the economic environment, are going to use that interest rate to rush out and go and buy a car. You can't buy a car because the dealerships are closed, etc. So it doesn't stimulate the economy in the short term. It's not as if people are going to go and spend more money because the interest rate has come down. What happens is the lower interest rate helps to relieve some of the pressure that people are feeling because of existing debt. That may be a mortgage debt or other forms of credit. The interest rate comes down, and therefore the consumer feels a little bit of relief. There's also a very important confidence factor linked to interest rates. So when we see interest rates coming down, we tend to feel a little bit better. We feel that we are in an overall more comfortable position. And so it can help to mitigate some of the fall off in confidence that's going on at the moment. So I think it's the right move from the Reserve Bank. I think it's a very bold, it's an emphatic move. It's what the rest of the world is doing in terms of cutting their interest rates. But I think we've got to be realistic about how much benefit it can.
OPEC and some of its allies. Today we saw mining shares hitting double-digit gains, the likes of Sibanye-Stillwater up 26%, Goldfields up almost 20% as the price of gold rallied. Here's a quick look now at what the local indicators are showing us. Well, with the rand at 18.35 to the dollar, that's where we leave the numbers, Sally.